Hey traders, checking in on the stock market today. Some wild volatility, but the bears come out on top with successful defense of key resistance levels in the short term on the back of CPI numbers. Are our weekly lower highs set is now the question we're going to be pondering for the next couple of days. All right, so CPI numbers dictated momentum on the morning. Before we get into it, just want to state that if you are newer to trading, days like today make your head spin and they're extremely difficult. If you are not new to trading and if you've been doing this for a long time, these are the days that you look for because you are calm, cool, and collected, and you have a significant amount of volatility. You can trade in both directions, make good profit in both directions. And again, when the size of the pie of the percentage range movement is this big versus this big, I have much more opportunity to make my day maker. So if we have a range of 5% on a leveraged ETF or 2% for an ETF, and I only need 1%, it's a lot easier for me to make my gains than it is if the range of the day is 1%. So don't let days like today discourage you if you're newer. Today is a day to observe and to learn, and maybe try a trade or two with small capital sizes. But again, it's really when you're comfortable and confident that you use days like today to try and make some significant gains. So we are in a very volatile market environment. We certainly know that much is so. I'm going to talk at the end of this video about my trading style, the things I did today, and how I'm trying to shift my trading style a bit and how it's different than what it has been. But for right now, it is very clear that we had a nice stand by the bears. In the video yesterday, I mentioned if we had a bullish reaction to CPI numbers, in my opinion, we would have started to see sentiment shift in the market towards the bulls. But this was a very good defensive stand from the bears, rejecting from the high of the bounce thus far, and we absolutely dumped in reaction to the CPI numbers. We V-shaped recovered, but it was a clear top fish play for bears off of the levels that we came from, and then we rolled over and the bears controlled the rest of the day from there. And there was a big spike here and big volume when we had a tightening range, the anticipated equilibrium after the significant volatility. And then we had someone in the Fed, don't even know his name, but talking about potentially increasing rates more significantly. And that led to just complete bear control from there. I think he said 1% instead of 0.5%. But either way, complete bear control into the end of the day after very significant volatility in both directions. So here's that 15-minute equilibrium that the bears won. So now the question, so bears proved it as far as they played defense. So now the bulls have to play defense. The bulls must defend this daily level. And the fact that we V-shaped bounced and then broke the low of today is definitely a big win for the bears. If you hold that V-shaped low of today and then tighten up and then the bulls hold on, you've got a nice solid clear support level. To V-shape and then break that low, that is bears definitely getting our attention. So we know we're scouting weekly lower highs, bigger picture. And now with this daily resistance rejection, the question is, are these weekly lower highs shaping up? So we see the weekly little double top on this candle, and it's going to be key at this daily level. We might not get an answer tomorrow, and we might. If the bulls play defense and defend this support level, it's going to take until next week before we get an answer, because we've been trading within this range now for a total of 8 days. And if we hold support, which is 443.83 on SPY, so what's that? We got after hours, we're down a little bit, but we've got 443. We've got about 1% plus to work with as far as space, and the hourly RSI is oversold, just getting there. So if the bulls can defend support, we're going to stay in a tightening sideways range, and it's going to be early next week that dictates a support break and a weekly lower high being set, or a resistance break and continued bounce follow through. So with where we stand right now, the bulls need a $9 move to get to resistance. The bears only need a $5.50 move to get to support. So no matter how you cut it, definitely a big win for the bears today. And again, their back was against the wall, but they defended that resistance. And you look at the NASDAQ, and we didn't quite get up to that resistance, but we set a lower high. So now the question is, can the bears confirm the daily downtrend? Can we drop down and break that support? And looking at QQQ, that level is 351.97. So if 351.97 breaks, the bears, it's a cat. I don't like when cats eat my bird. I don't remember exactly what I was saying, but key daily support 351.97, and we are about $6.5 above that support level, and we are now $11.5 below resistance. So daily lower high set, and if we confirm the daily downtrend, the bears are back in the driver's seat. So you can see how quickly things shift in this market, and it was the same thing with QQQ with the V-shaped bounce, rejection from resistance, equilibrium, and then the bears win that equilibrium, and we roll over into daily consolidation. So bulls must show up tomorrow for the tightening daily range. If we don't, and we drop down and break this low, weekly lower highs are shaping up, and we can definitely revisit these fear lows. So in the span of, how many hours did it take? Span of about 5 hours. The last 4 hours, things significantly shifted. And if the bulls show up and break daily resistance, we're going to go right back to being bullish. But if this daily support breaks, weekly lower highs being set is going to be very notable. And again, the fear lows will be back in play. And there'll be names, the names that are going to be the first to break supports are the names that obviously didn't bounce as significantly. So a name like XLF has a lot more space to work with than a name like QQQ. And growth names don't have a lot of space to work with. They can be potential weekly bear flags because at the moment, some of these names have confirmed daily trend changes with no follow through. And when you confirm a trend change with no follow through, you zoom out and scout a flag. So there's potential weekly bear flags out there. So my bullish tone the last 3-4 days will 180-degree turn to a bearish tone if this daily support is taken out. And again, we may not find out tomorrow, but if we don't, we'll certainly find out early next week. SMH, so bull break to a higher high, but closing weak. So rolling over, and the bears will need to confirm an hourly downtrend. We lost the hourly uptrend. So if tomorrow the bears confirm an hourly downtrend with a lower high and lower low, the most important support level for us is going to be 266.48. So the bulls still have a lot of space to work with. There's some names here like SMH where to get back to the high of this entire bounce, we need $11. And back towards our low, it's $13 plus. So we are closer to resistance than we are to support. Both names that we just looked at, SPY and QQQ, are closer to support than they are to resistance. So each individual name, each individual sector has more or less space to work with. And that's how we can compare these individual names and sectors and say who's weaker, who's stronger. And that identifying of how the sectors are reacting to each other or interplaying off of each other is a major aspect with my shift in trading style, which I'll talk about at the end of this video. So Tesla has a very clear resistance level, and it's a very simple statement. Tesla, if 948 is resistance, the bears have complete control. Look at this resistance rejection here. 1, 2, 3, 4 times now. We've rejected from that level. And if we roll over and break 880 support, weekly lower high is set, and it's a weekly bear flag. This is a weekly bear flag. So the burden is on the bulls to prove to us that it's not a weekly bear flag, but if we cannot get over 947, it's a weekly bear flag. So that 947 level is now the level, and it's the only resistance that I care about on Tesla as long as it remains. Healthcare, daily pullback underway. Short-term support 131.07 needs to hold if the bulls are going to maintain the daily higher lows. So we're watching that level because if that level breaks, weekly lower high is likely set. Financial sector, just beginning daily consolidation, tons of space for a daily higher low. We got within 0.7% of an all-time high today, but it's possible a weekly lower high is shaping up. And that's why the move at the end of the day today, the last 4 hours, felt so powerful from the bears because all of our sectors were dropping together. We know when there's rotation going on and one of our major sectors is holding up and other sectors are dropping, the broader market does not feel significant fear. But if all of our sectors are dropping at the same time, it's different and it's a more powerful move. And again, that's what happened the last 4 hours of trading today. So there's now definitely a pathway where the bears can significantly take over. And if we break our feared lows, if we set weekly lower highs and then drop to lower lows and confirm the weekly downtrend, that's step number 1 for a bear market. Then we need to confirm a monthly downtrend. I know everybody has different metrics on how they measure a bear market. For me, it's trends. And so confirming a weekly downtrend, definitely a notable step towards a bear market. And then if we confirm monthly downtrends, I can't remember if I've ever even seen a confirmed monthly downtrend. in the S&P 500. I assume I have, but it's been a long time. I had a little one back here. So this was a confirmed monthly downtrend in 2015 with zero follow through in SPY. And really that's the only time. We've taken out monthly supports on a drop, 2008. We've taken out monthly supports, but it's the lower high and lower low that we haven't seen. So if we confirm, let's just look into the future. Let's say we confirm a weekly downtrend. It's then going to be a big enough monthly pullback that we'll scout a monthly lower high as the result of the next bounce. And that could open the door for a confirmed monthly downtrend. For me, a confirmed monthly downtrend is a bear market. That's my definition, and nobody can make me change it. Just try. All right, so XLF. So tons of space for a daily high or low still. And the simple statement would be if XLF bulls can hold daily EMA 12 support, they're just fine. You could even make the argument of a cup and handle here, where if we hold daily EMA 12 and form a bull flag, it's a possible cup and handle. But certainly would need to see an hourly trend change back to the bulls, set the daily high or low, and shake the shift in sentiment that the bears took over the last 4 hours. IWM, big upper wick. Bulls bought the dip in our highest risk, highest reward places. Today, the CPI dip, they bought it aggressively. Bitcoin V-shaped to a higher high. IWM V-shaped to a higher high. Cannabis stocks had a great week, or a great day and a great week. And we also saw growth names just as the significant bounce leaders. But we rolled over. Broke the low of the day at the end of the day. So didn't lose the hourly uptrend significantly. And again, same thing, the IWM bears have to confirm an hourly downtrend if this weakness is going to have follow through. Anything above 194.92 is a daily high or low. Have to lose the daily uptrend for the weekly lower high to be set. So a lot of space still for IWM, anything above 194. So again, another name where we're looking at about $9 to get to support, and we're looking at about $6 to get to the high of this bounce. So this would be a name that's positioned better than others, but it's not going to be able to completely disregard the broader market. Biotech sector, same deal with a bull break to a higher high, but no follow through. Again, look at the weekly time frame on the biotech sector. This is a weekly bear flag unless the bulls prove otherwise, and right now they're not proving otherwise. It's a retracement bounce of about 40-45%, which I call the gray zone, but it is definitely still a possible bear flag. And it's a daily trend change yesterday with a lack of follow through right now. So if we go right into daily consolidation, break the low of today, tomorrow, then it'll be a daily trend change with no follow through, caution of the weekly bear flag. MSOS, great day today, but it looks like a potential volume climax. So again, USMJ standing out really strong. And this is one aspect where I did okay today because I swung a decent amount of positions and some bull exposure, but the names that I chose to swing held on real well comparatively. You know, NIO was my biggest losing swing, down 3%, but you know, some of these USMJ names, VRNOF was green up 2% today by the close. So that was very forgiving for me. But for right now, MSOS, if this is our daily climax and we break the low of today, tomorrow, anything above 2090 is a daily high or low. We know we're scouting a weekly lower high to be the result of this bounce. And the question is, has that weekly lower high been set? So I would put USMJ into the category with IWM saying we're holding on better, but we definitely saw weakness and profit taking today when the market rolled over in the final 4 hours of the day. So checking in on the metals, I laid out the scenario of what I want to see on the metals if I'm going to be looking for an entry. And I'm hoping, I laid that out yesterday, I'm hoping that this is our lower high and we see a couple days of consolidation. Give me another red day or two, and I'll start scaling into some positions. Give me an hourly oversold drop. And again, I'm just going to look for swing size positions, which for me is smaller than day trade because there's less control. But I'm going to look for GLD and SLV. And my stop will be if 1780 breaks. Not yet, but another red day and I start getting interested. Same thing with silver, big upper wick. Start that daily consolidation. Let me enter on consolidation and put my stop under 22 even. Or actually, like we said yesterday, 21.94. So potentially the trade's coming to me. Certainly a big sell-off in the miners. So that's potentially our lower high being set on the miners. And the play would be off of 28.87 on the miners, but I'm just going to stick with the metals and keep it simple. Clearly, the miners are being negatively impacted by the broader market stock weakness as well. Checking out uranium. So CCJ had a bullish earnings reaction yesterday. Look at that candle. Huge green day yesterday. Followed through today. It was definitely in the growth names where we saw the V-shaped bounce. So again, we had a little bear reaction with CPI, V-shaped bounce, but the market rolled over and dragged it down. So we can say we're holding on way better than QQQ and many other names, but we're not immune to the broader market pullback. So anything above 1935 will be a daily higher low. What I'm watching on uranium is the monthly EMA 12. And I'll be interested in bull positions as long as monthly EMA 12 is support. But what we will need is a weekly trend change. So on this move, anything under 2654 is a weekly lower high, and it would essentially be an inverse head and shoulders, where if we fail that level, if we can shape up a weekly higher low, that's the entry. So that's where bulls are looking for entries at this point. If we are indeed setting weekly lower highs on a lot of these names, many names don't have space for the weekly higher low. But a name like CCJ, we can pull back 15% and still look for a weekly higher low. And then you have a name like Bitcoin. Bitcoin has seen a big enough weekly bounce where we could pull back over 20% and still be looking for a weekly higher low. So there are some names that have a lot more space for a weekly higher low to try and shape up a longer term trend change than others. So CCJ is one where I'm interested. If we start some weekly consolidation, I may try for a weekly higher low playing off of $18 support, because that monthly uptrend is still intact as far as I'm concerned, as long as that EMA 12 is support. And LAC is a lithium name. It's the same deal. Looks very similar, except what? Bigger bull move? It's very similar. So held EMA 12 on the monthly. Anything on the monthly above $12 is a higher low. Tons of space. And we're looking for a monthly higher low here again. So let's look at the weekly. Solid bounce on the weekly, but anything under 3407 is just a weekly lower high. So if we set the weekly lower high, I get interested scouting a weekly higher low, and I look to play off 2278. And you'll note that that's the same exact trade style as what I'm looking to do on the metals. It's just a different time frame. So technical analysis is applied the same on different time frames. And if the percentage move is greater, because I'm looking at the weekly level instead of the daily level, that means my position size is smaller to account for the greater risk. So I'm keeping an eye on lithium and uranium names to see if they can give me a weekly trend change setup that I like. And crypto. But again, names like XBI don't have the luxury of having that space for a weekly higher low to try and form. Rather than having 25% space like Bitcoin might have, something like that, we only have 10% space. A little more than that, 11, 12% before we drop to the lower low. So not all names and sectors are created equal. They're all very similar, just different versions. Bigger bounces, weaker bounces, more space created, less space created. But what it boils down to in the short term, looking at these weekly charts, I'm looking out a little bit. I'm looking over the next 2 weeks. But what I care about the next 2 days are these daily levels on the S&P 500 and QQQ to see if we're going to tighten up with an equilibrium or if we are going to bear break, confirm daily downtrends, and set weekly lower highs. And I will look to be positioned either way. If we see these daily higher lows lost, I will very quickly exit probably all of a significant amount of my swing positions, and I will then be in bear swing positions. So what I've been doing the last few days is different. The last 4 years, I significantly shifted my trading style and really focused on scalp day trading, and it went really, really well. But it requires a ton of time and a ton of effort, and I know it is not sustainable for me to keep that up for the next 30 years. So I enjoy it and I love doing it, but it requires continuity. Someone had a good question on another video where I was talking about this, and they said, why don't you just hop on for 2 days a week and use larger position sizes and just day trade your wins and there's your income. Continuity is key. When I go on vacation, I've been on the computer doing these markets with the chart guys pretty much 95% of every trading day for the last 5.5 to 6 years, more than 6 years, 6.5 years. When I miss even just a couple days away from the screen, it takes me days, a day or two to get back because the continuity break, my brain has to catch up. You know, when I'm looking at the chart every day, I know what the S&P 500 4-hour chart looks like on its futures chart right now. And I have to check in on it much less. But if there's a big gap, it's just like a movie reel. And if there's a big gap that I missed, I've got to go back and I've got to catch up. And then I've got to catch back up to the present. And it's not the same. I am way less of a good trader. I'm a much worse trader if you just drop me in. Just take me out of the game for 2 weeks and stick me back in. I mean, think about it. Compare it to sports. It's like any other sport. If I'm playing basketball every day practicing, I'm going to be so much easier to cruise into my flow state than I will be if you take me off the court for 2 weeks and then throw me on it. It's going to take me a while to find my flow state back. So it's not the same. I'm a way better trader when I'm here every day, paying attention every day, and just picking up right where I left off, as opposed to having those continuity holes. So the way that I'm trading now, more swing trading the last 2 years, really pleased with how 2021 swing trading went, but I really don't like drawdowns in my account. Nobody does, but there are swing traders who fully accept that if I'm going to be playing a daily uptrend, that the days that we pull back, my account is going to drop down. I don't like that at all. I want to go one step forward every single day. I want more money today than I had yesterday as my goal on every single daily basis. And I know that's really tricky to do if I'm letting moves play out. For example, today, NIO has been a great swing trade, but today NIO hurt my account. So I can't lose on this NIO trade unless we see a significant bear gap down news scenario, because I've taken enough profit on the way up where my break even, I just can't lose. But my account can still go down. So my NIO obviously is worth less today than it was yesterday. So how do I offset that? And that's where I'm putting to work the amount of observation that I've been putting in, the hundreds and hundreds of hours where I am watching how these sectors are trading and constantly gauging who's stronger, who's weaker, where is there an inverse correlation, where is there a direct correlation, where is capital shifting, where is the rotation going on? And I'm looking to use that information, and it's really helped. Today was a really prime example where obviously by the end of the day, things changed, and I'll tell you why. But to start the day, I was extremely pleased with my swing positions because I chose swinging in mostly growth names. Growth names did not drop as hard on the CPI dump. They bounced harder on the CPI bull reaction, and SQQQ was weaker. So my hedge is SQQQ. So I'm hedging, I'm short the weaker sector, and I'm long the stronger sector. And there was a point in time this morning where my longs were all green and my short was green as well, which is obviously an ideal scenario. But things changed. So we saw obviously weakness into the end of the day. And the lessons for me today were, number one, I left the computer for a couple hours, and leaving the computer cost me a lot of money today. And I made a mistake. So the mistake that I made was adding MSOS. So I have an MSOS swing position, again, very comfortably profitable, but if it's red, that means it hurts my account from where I was yesterday. So I was trying to play this 15-minute bull flag on MSOS, and I had a nice position that was comfortable, and I had a small amount of risk, where if I stopped out, I would have given back maybe 30 to 40% of a day maker, and that's no big deal. But I didn't place the stop order. And that's something that the goal as a trader is to put as much time between those mistakes as possible. I'm not going to kid myself and say it's never going to happen, because the laws of probability, if I am placing 1,000 orders and 1,000 trades and I'm typing 1,000 numbers 1,000 times, I am going to make a mistake. I'm human. That's going to happen. I know it will happen. It's just a question of, does it happen once every 4 months, or does it happen once every 2 years? So today, it was a big mistake where if I was at the computer, I would have caught that mistake, and it ended up being a solid loss. It ended up being maybe instead of a 30 to 40% loser, 70 to 80% day loser, which is a decent enough difference. You know, I caught it once I came home. It wasn't too brutal. It could have been a lot worse. So it's a big wake-up call. Okay, you idiot, double check your orders before you leave the computer screen. It's the kind of thing where, okay, I check every single time for 2 months, and then I get lulled into the sense of complacency because I'm always on point, I'm always right, and then it's that one time where you screw up that reminds you. Same thing with stop losses. You place a stop loss every time, you're in a really hot winning streak, you get a little lackadaisical with them, and you have that big loss that reminds you, oh yeah, that's why you use a stop loss on every trade, you idiot. So that was a big mistake for me. Again, not too painful. And just to let you know where I'm at, because I've been sharing, the winners the past couple of days, 3 trading days, the previous 3 trading days this week, I was probably up maybe 8-day maker. And today I gave back a 2-day maker. So it's still a great week, but my account is taking a little step back. I just have to ensure that for every little step back, there's a bigger step forward. But that was a major aspect to my loss today. And the other aspect was I didn't hedge enough while I was gone. So I traded QQQ this morning. I had a swing position in SQQQ overnight, smaller than my open long positions. I knew going into CPI that I am risking a coin flip here. And if it's a bearish reaction, I'll get back some of my profits. And the reason I went into this and gave the bulls a chance was because, number one, I felt a resistance break would be very meaningful and a significant sentiment shift in the market. So I wanted to give that possibility. And number two, I had a lot of profit cushion to work with over the past couple of days. So again, knowingly giving back a day maker or 2 after being up an 8-day maker, I was perfectly accepting that risk reward. So we ended up with a bearish reaction and I scaled out of my SQQQ too early. Here's a lesson. I was too early in every direction I played this morning and I still made money in every direction. You don't have to nail tops and bottoms. You just need the meat of the move. So by selling on the way down, it was the right decision. I sold too fast. I pretty much missed this leg down, but I started going long. And at that point, I only had long exposure because I just exited all of my short protection, but the 5 and 15 minute RSI and 30 minute RSI on all these futures charts were crushed enough, and we had enough space to work with where I was just looking for a 4-hour or a 12-hour higher low on the futures charts that I was confident we would see at least a 15-minute oversold bounce. I did not expect the size of this bounce once the bell rang, but I was positioned to benefit from it. So I scaled out the longs that I entered, some a little bit early, and then, I'm not giving you exact levels, but scaled out too early. I probably was all out at this point, and I missed this entire move. But again, made money on that trade. And I knew I was quicker to scale out on the bull side because I only had bull exposure. And I know, okay, well, if I scale out my TQQQ, the bull leverage ETF, if I scale it out too early, that's a-okay because all my other long open positions are going to benefit if it keeps going up. The last thing I want to do is have only bull exposure, not sell, and then we start dropping back down again. Next thing I know, I've got a whole bunch of bags in the wrong direction. So once I sold all of my longs too soon, I start building my SQQQ position back. Again, I sold it all down here. So anything up here is just rebuying my protection at cheaper levels. So scaling into some SQQQ, anticipating the 15-minute equilibrium, scaled out a little bit, anticipating a 15-minute higher low. And if I were at the computer, would have been able to easily increase the short size enough, playing off these levels, to protect against the drop that took place. Pretty much position myself where I'll be a-okay. I won't get back many gains at all if we see a 15-minute equilibrium break bear. So after not having a big enough short position, I did get home right here and I added short. I added SQQQ. Why? Because we were on the verge of this double bottom breaking and my stop level is right here. So risk to reward is worth it. So if we break the 15-minute lower high, I stop out of the new short that I just added on. We'll call it my aggressive short position. And if we don't break that resistance and we break the double bottom at the low of the day, in my opinion, the reward is more significant because that's a key short-term support level and there's a lack of support immediately below it. So I've got more SQQQ than I had yesterday after hours. So I'm swinging SQQQ, and I've got those long positions open as well. I've got NIO, I've got Facebook. Facebook went green today on that bounce, but gave some back. So NIO, Facebook, MSOS. Again, MSOS did real well today, so that wasn't very painful at all. VRNOF closed green to help me today. MNMD had a big day. It closed green, so that didn't hurt me. And CURLF from yesterday, nice push up, but by the end of the day, added to the account, dropping a bit. So in the end, just lessons. Again, I'm learning, right? I'm shifting my trading style. I'm very confident with scalp trading, day trading. I've got that down. And if I am looking for longevity in markets trading, I need to continually adapt and continually shift my trading style for different scenarios. And I want to get real good at swing trading while constantly protecting with hedging with weaker sectors. If I'm long the stronger sectors and the weaker sectors, that's what I'm looking to do. So in the end, I will significantly exit all my long positions. NIO gone, Facebook will be gone, a lot of my MNMD will be gone. I'll probably keep a core around USMJ, just in case this is more of a cycle bottom looking towards the voting season late in the year. But I will continuously hedge those open positions. But all that will happen if SPY and QQQ lose these daily support levels. So that is where I stand and how I'm managing these markets. It's been a solid start to the year. At this point, I'm probably at maybe a quarter of the capital gains I want to have by the end of the year for my goals. And I've only traded 4 weeks. I skipped the first week of trading. I was away. So I'm very pleased with how the year is going. But for me, it's more important to get better at this new style that I am practicing. How long are we right now? Not bad, 26. Appreciate you watching. Do good things. See you tomorrow.
Lower high, higher low, low high, higher low, 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 lower high, higher low, low high, higher low.
Bitcoin's breaking out.